What is going on with HIMS stock? Popular demand here on the channel, cover HIMS, what is going on with the company, what is going on with the stock. So let's discuss. Right now, the stock is trading at $16.25, has a market cap of $3.5 billion and a forward PE of 24.1 times. Now, when you look at the year-to-date performance, it's up 82%. It's up over 130% year over year. So to be honest, I don't know why people are complaining about its performance. Yes, it's true that in the last 3 months, the stock is down around 12% or so. But so what? So what? If you've been holding this stock for a while, you're up quite significantly. You are outperforming the market by quite a lot. Now, currently, if you look at the analyst estimates, this company is still expected to grow quite rapidly in the coming fiscal years. If we look at the average analyst price target, it sits 36% higher than the price we're at today at around $22. Now, why is the stock up so much? What has happened? Well, here clearly a major overview you can see. Revenue keeps on increasing year over year, and same with gross profit. But what has happened more recently? Well, 1, free cash flow positive, and 2, net income. Not a loss, but finally net income. And this, in my opinion, is just the start. If we look at some valuation metrics here, it is currently under the 5-year mean, where in this case, 5-year mean-ish. But remember, previously this company was not profitable, so now that it is becoming more and more profitable, then of course it will stay under these 5-year means, forward PE, EV to EBITDA, price to sales, price to free cash flow. But as we continue to get quarterly figures, you're going to get a better picture in the long run. Now, again, why is the stock down? Why can't the stock continue to go up? Well, newsflash, stocks sometimes don't go up indefinitely. It's still up 80% this year. It's still up over 130% year over year. What do you want it to happen? To be worth $20 billion? It's not worth $20 billion. Let's be honest. Is it worth more than $3.5 billion? Yeah, maybe. But there was a moment this year where the stock suddenly jumped a lot. The moment they announced their GLP-1 product, right? Stock went up because that was all the hype. That was all the talk right now. Oh, they're going to launch that product. It's going to be cheaper. More people will be able to buy. It's going to be great for the company. But more recently, a little bit of bad news for them, good news for the overall industry. Because previously, what was the issue? The issue was, well, too many people wanted that product. It also cost a lot of money. So supply, demand, it's not really difficult to understand how that works. Not that much supply, a lot of demand, it's expensive. But when you figured out the supply and demand has maybe come down a little bit, then yes, prices will come down and the big companies will become bigger, and the smaller ones that tried to enter the market are maybe going to have some difficulties. That's the sentiment, right? That's the sentiment. Previously, high demand, low supply, they come in with an alternative, great for the business. Now, suddenly, we've heard some reports that are saying, actually, supply is increasing, so demand should normalize. That hurts a stock like HIMS in the short run. We'll discuss everything that has happened more recently. If you enjoy this type of videos, leave it a thumbs up, subscribe if you have not. We'll really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment to the top 10 best stocks to buy now, or go to fool.com/couchinvestor. Thank you very much. So first up, this is what I mentioned. Eli Lilly CEO says weight loss drug shortage is ending. The ongoing shortage of Eli Lilly's highly popular weight loss drug Zepbound in the United States is expected to officially end in the days ahead, and this was at the start of August. Now, HIMS specifically, they are offering something a bit different. First of all, in the recent quarter, they said that they partnered with a leading FDA-registered 503B outsourcing facility to provide access to compounded GLP-1s for their initial launch. Additionally, we have signed an agreement to acquire our own FDA-registered 503B outsourcing facility over the coming quarters. We will invest in multiple sources of supply to continue meeting the demand on our platform as it scales. We plan to bring this same level of excellence to the production of compounded GLP-1s. Consumers will have access to a certificate of analysis for their compounded GLP-1 treatments. And this is the thing. They say we will invest in multiple sources of supply to continue meeting the demand on our platform as it scales. So yes, it's great when there is a supply, there is a shortage, and you come in with another solution, that's great. But when you're told by one of the huge players that suddenly, okay, shortage is not an issue anymore, and you continue to invest, it might hurt you. Now, for those of you that don't understand this 503B, compounded stuff, etc., let me explain. So the law defines an outsourcing facility as a facility at one geographic location or address that is engaged in the compounding of sterile drugs, has elected to register as an outsourcing facility, and complies with all the requirements of Section 503B. Drugs compounded by an outsourcing facility can qualify for exemptions from FDA approval requirements and the requirement to label products with adequate direction for use, but not from current good manufacturing practice requirements. Basically, what you're going to sell here with regards to the compounded part is a drug that is not as tested by the FDA as the other products. And that's, in my opinion, an issue. It's like saying, oh, I want these Air Jordans Travis Scott shoes, but I don't want the real ones. I want the knockoff version, but the knockoff version that actually looks very, very real. It's a bit of the same. Now, in the short run, okay, might work out. But what happens when suddenly long-term effects are discovered, negative effects? Not just for the compounded version, but for the real version as well, because it's still early days. Well, you're probably going to be hit by lawsuits, headlines, and that's going to hurt your business. Now, in the short run, again, this can be great. This will generate more and more revenue for your business. But me personally, I don't need it, but if you are looking for such drugs, first of all, just go on a walk each and every day. It will help you tremendously. But then if you really need to take those drugs, then try and get the actual real ones. Yes, it might cost you a bit more money, but are you willing to risk your health because something is cheaper and not really proven that much either, right? So that's basically the, let's say, weight on the stock right now a little bit, because overall, subscribers grew 43% year over year. Revenue increased 52% year over year. Monthly online revenue per average subscriber keeps going up, $57 here, so that's fine. If we look at the margin profile, yes, it's down quarter over quarter, 81%, and it's down the same since last year. Last year was 82%. They say here, both the year-on-year and sequential declines were primarily the result of higher costs related to new offerings during the quarter, which were somewhat offset by ongoing benefits from economies of scale, in part due to increased volume at our affiliated pharmacies. Overall, if you are staying above 80%, I think that's quite fine. Now, as I said at the start of this video, this company became net income profitable the last couple of quarters and continues to grow. GAAP net income per diluted share was 1 cent in Q4, then 5 cents in Q1, and now 6 cents in Q2, with a net income margin that grows as well, 0.5% to 4% to now 4.2%. From an adjusted EBITDA basis, it has been positive already since Q4 of 2022, and here again you can see it now continues to grow and actually accelerated since late 2023. How do you do all of this? Well, GAAP operating expenses and non-GAAP operating expenses are down year over year. And yes, you're seeing this correctly. Marketing as a percentage of revenue is the majority of the expenses. It sits at 46% on a GAAP basis. As for outlook for the next quarter and for the full year 2024, by the way, they revised it on the upside, revenue and adjusted EBITDA for full year 2024. So they now expect revenue to grow between 57 and 61% year over year, with an adjusted EBITDA margin of 10 to 11%. As for Q3, they expect revenue to increase between 65 to 68% and adjusted EBITDA margin of 10% at the midpoint. The underlying themes here stays a bit of the same. 1, over 85% long-term retention. 2, expanding portfolio of personalized offerings. I believe they want 1 million subscribers by the end of the year, something like that. 3, strong unit economics with payback period under 1 year. And 4, evolving model drives inherent marketing efficiencies, which is of course why you're seeing this right here. And so when you look at the graph right now, the stock has been around these prices for the last 3 weeks or so. It did rebound back here, Black Monday, of course, did rebound just under the 200-day moving average, and now it sits just over it. It was also the same area where previously back in March of 2024, we got a rejection for a couple of weeks, went back, and then we ripped through that $16, $17 mark. So if we can create a base right here, I don't own these shares anymore, but if HIMS can create a base right here, stay above that 200-day moving average, I think that's a healthy thing for the stock. As for the business, if you are now solely invested in HIMS just because of the weight loss drug, then you're invested for the wrong reasons. Previously, before they even announced it, the business was doing quite well. So you have to look at HIMS not just from a GLP standpoint, but from the overall business standpoint, everything that they're offering, everything that they offered before, and everything that they could be offering in the future. Yes, there is a risk by offering compounded versions. There is definitely a risk. There's also a risk by just taking the real thing, right? Because it's still early days. We don't know, I'm not a doctor, definitely not, but we don't know what the long-term effects will be. You have to take that into consideration, but purely looking at HIMS right now, just from a GLP standpoint, to me, it just doesn't make sense because the other side of the business is doing everything that it should be doing. So that's about it. That's the update that many of you wanted to hear. Do share your thoughts down in the comment section below. If you have some experience with HIMS or with these types of products, share them down in the comment section below. I don't think I know everything about that industry or those products, far from it. So maybe if I'm wrong on some things, do let me know down in the comment section below and I'll correct it in the pinned comment. Hit all the buttons, like, subscribe, do all of that, and I'll see you all in the next one. Bye bye.